Hello everyone and welcome back to Auto Flowing. Do you want to know when to buy? Down here. And when to sell? Up here. As you can see, the binary fissure indicator works very well in figuring out where the market will turn and where it's overbought or oversold. This is the default options where it's just showing the fissure based on price. You can also use this with volatility, which I will show you later. But first off, let's go into it. So if we jump on the 12-hour instead and come over to here where I have drawn this. So as we can see, the indicator is trending lower while the price is trending higher. We have a triple top here basically on the indicator. And if I quickly toggle on the divergence detection, I'll just press show the regular divergence for this one. We can see on the chart we have two regular divergences that I marked out here. Also at the first push up on the trend we have the overbought condition triggering, and then we have these three tops and it keeps on going lower, 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 and then the trend shifts at this divergence. We then get a push further down until the fissure is oversold in the oversold condition. After that, we get a bounce back up into the overbought condition. That's just an example of the fissure in the price mechanism. So if we go into the settings, we can take predict volatility instead. Let me just jump onto another chart, Ethereum, for example. Okay, so how do I explain this? When we have the fissure on volatility and the fissure is either at a high point or a low point, that just means that the volatility is at a point where something is going to happen. So in this case, the volatility was very low here at this level. Of course, the trend here was down. And if I want to show trend even better, I can put on ribbon trend. Right, so trend down. And here at this inflection point where we have before the further push down, we had this wick up into and above trends and then back down. Volatility was at the low point here. So we know that at some point the volatility is so low that something has to happen. And we get the push up in volatility and price breaks further down. We could also invert the chart, the scale, if we wanted to see based on that when volatility goes up, price goes down. So maybe you want to invert the binary fissure on volatility depending on the chart. Let's go back to the normal scale. Okay, let's try another one. So the SV here, this is kind of the same scenario as we have volatility going down, and the breakout is the downwards candles. Yeah. When volatility is at the high point here, we have this kind of resistance in the volatility. Every time we hit the high point, the price is coming to a bottom. Short-term bottom, of course, except for this one. This was at the high. So not always, but I mean, yeah, we can use it to predict whether or not it's at the high or a low point. So here the high, and then we had the trend shift here because we failed to break the 4000 level, 4080 or 100 level. So here we had another wick to the downside at the peak of volatility, and here we had another giant wick at the peak of volatility. So that was the SV type. Now we have the Novas type. Let's try and see. Okay, so this one follows price more, I'd say, and the curvature of it fits the price data even more. So let's say you had the condition of that the chart was oversold, condition on the volatility, and you have a divergent. So for example, down here, we have the regular bullish divergence at the lows of the wick after this candle. And as well as here, we get the regular bullish divergence here on the volatility. So we know that volatility is kicking in, and here we had a regular bearish one from another high point in the volatility. And this was convenient right before the push further up from these lows. So overall, it's a great indicator to either predict volatility or to just use as a normal Fisher transform and watch for divergences and similar like this. I mean, this is a pretty good setup, and I also showed it in the article. So I think that was it. If you want to read more about the indicator, you can go onto the TradingView page and onto the article, of course, where everything is described in detail. Yeah, so here's the website. Thank you for watching, and I'll see you next time.